Hello and welcome to another update video on ADA. I think today is one of those days where it makes sense to take a look at the bigger picture again, just because we haven't done it for quite some time, the larger time frame, for ADA. And it's sometimes helpful to just zoom out and just take a broader look at what's going on there. And we can see that here on the ADA chart, the market has basically only been moving sideways for several months, actually. I mean, nearly all year we've been in a sideways pattern. Now, of course, there is some volatility and the tendency rather looks downward because the market has formed another low. I always say that double bottom, triple bottom structures are often not a reliable bottoming confirmation. You guys know that. We often want a clear low, like it was here in August, like it was here in June 2023 and August 2024. We did never get that clear low in this range, which might have prevented ADA from fully breaking out. Again, I'm not saying that this new low is actually bullish. That would be a bit, yeah, no, it's not bullish, but it at least gives us a clear low and a clear three-wave move to the downside. So, I mean, in a sense, the chart looks a bit more harmonic as it did before because it has given us a clean low. Of course, it was a crash, but the recovery was also strong. But since that 10th of October crash and then subsequent recovery, the market has basically been frozen and has only been moving sideways, right? So what we really need to see from here is some upside momentum. You will see on the smaller time frame which levels now need to be broken to the upside to keep this idea alive that we could still follow the white or the orange scenarios after a low in either wave B in orange or wave B in white. This is kind of the same. Yeah, it's a corrective pullback. But the question is it embedded in a larger diagonal pattern as shown in orange, or is it, let's say, only a B wave? The risk here is that obviously we fail to recover and we fail to break above those signal levels. That's the risk because the market isn't moving in any impulsive structures. We're only moving in corrective, messy structures. So the structures remain very, very messy and questionable. It's just something to keep in mind, yeah. But overall, looking at the bigger picture, I think there is still scope for upside. The larger support area is between 32 cents and 54 cents. That's the larger support area for this current B wave. But ideally that B wave bottomed. But I will only really consider this as long as we're holding above the 47-cent level. That's the 78.6 retracement of the last recovery rally from when the price hit support here. I think it was the 61.8 retracement, yeah, at 43.7 cents of the larger support area. And in the smaller support area, yeah, we need to hold the 47.3 cent level. I mean, ideally, we don't really get a very deep pullback, but it's possible. We have to give it that room. Up here, not much is happening. The key levels that now need to be broken to the upside, especially here on the daily chart, clearly visible. We have the first trend line, yeah, with around 81 cents, 82 cents as first resistance and trend line. And the next one is above around 93 to 94 cents. These are the next resistance levels that need to be broken that allow the price to climb higher once broken. In the very short term, and now we can transition over to the shorter time frame, obviously here we're looking for clues if the market is bottomed. We're looking for clues for 5-wave movements to the upside. I have to say, I mean, there isn't really that one clue that we've bottomed. The nearest resistance area here is between 67.8 cents and 71.8 cents. It's the Fibonacci resistance area. But what can I say? It's the nearest resistance area. It's weak, yeah, and we haven't broken it. Not even that one. We're just moving sideways basically at the moment, yeah. So another low cannot be ruled out. It's actually quite likely that we form this broader wave 2. I showed you this support area just now on the larger time frame. And there is a micro support area which is also weak because we're just dealing here with a sideways range up here. We could even add trend lines because it looks a bit like a triangle. I've done that for various charts. But I'm not sure how reliable these trend lines are. But basically we're moving between support resistance. And as long as we're in a range, these are simply the parameters that kind of keep us in the range. So a break below 61 cents should open the door to the lower support area. A break above 71.8 cents opens the door to a test of the 82 cent level, which is also the swing high of the 10th of October, where that selling pressure started to kick in. So again, we have to be patient. Not much going on. I know it's difficult, but that's why we're here, to keep it a little bit more interesting. If crypto is boring, maybe check out our other channel where we cover gold, silver, also platinum, and other charts are covered there. That's you might not even know that it exists. Some people don't. It's the MCO Global Equities and Commodities channel. Um, you know, I cover gold, silver there every single day, sometimes even a Tesla update, sometimes a NASDAQ update. And, feel free to follow us there and then let us know in the comments which are the charts you would like to see here as well. But yeah, that might keep it interesting while the crypto sector is a bit boring. So I'll leave a link for you guys in the comment section. Have a great day. Don't forget to hit the like button, subscribe if you haven't done that yet. And then, yeah, have a great day. Thanks so much. Bye-bye.